Sidekick Accounting, your accounting sidekick. And I wanted to stop in. It's been a while. Oh my goodness. November was a little ridiculous for me and our family. Again, it's been like month after month, it seems like, since we had COVID last year. But anywho, we're getting back on track just in time for the end of the year and ready to rock 2023 as well. So, but I wanted to come on here and talk to you a little bit about S-Corps and just talk about how they are something that a lot of people are interested about. I get lots of questions about electing S-Corp status. And I wanted to just kind of point out a few things before you decide to make the switch. Because there is a right time and a wrong time. And while it does save you money in taxes, it can also add a lot of things onto your plate as far as compliance and maintenance and all of that jazz. So first, an S-Corp election is the way that your business gets taxed. Funny enough, the IRS actually does not recognize a single member LLC as its own entity. So a single member LLC either gets taxed as a sole proprietorship, which is where it goes on your personal taxes, or it can be recognized as a partnership or an S-Corp or a C-Corp. And so when you form a single member LLC, it's actually the best way, in my opinion, to form a business, because what it gives you is that gives you that liability separation, but then it also allows you to grow along with your business without having a new entity. And what I mean by that is that when you have a single member LLC, at one point or another, you can actually elect for it to be taxed as an S-Corp or a C-Corp. And so it provides a lot of flexibility for your business as it grows. And I apologize, my kids are home, so you guys are just going to have to rock with me. Trying to keep a 4-year-old quiet is almost impossible. But anyways, so one of the things that you really have to consider with it, one is that it's going to have its own tax return. Ishmael. It's going to have its own tax return. So you got to account for that. Make sure you're planning for your business to have its own tax return, not just yours, so it's more expense there. One is that technically you're supposed to have like a board of directors or something that authorizes the movements of your business. Now, it can't just be you, but you got to document that that's part of the compliance piece of it. This came up a lot during COVID because the SBA requested this documentation when people were EIDL loans, and many people were not sure what it meant or how to do it, but it basically you had to have board approval letter written up that indicated that everybody involved with the business agreed that it could get a loan. So anyways, that is part of the compliance. The other part, and this is a big part, is that business owners are supposed to get paid on salary. So when you have an S-Corp election, you are supposed to pay yourself with a W-2. If you are a single member LLC or if you are a partnership, you do not get a W-2 from your business. You get paid by doing owner's draws or distributions is what they sometimes refer to. When you are an S-Corp, you need to make sure you are paying yourself reasonable compensation. Now, what this means is that it has to be reasonable. There's many different ways to do it, and we have a method to figuring this out. But it basically means if your net income is $100,000, it is not reasonable for you as a business owner to pay yourself a $30,000 salary. That is going to be a huge risk, and it's going to be an issue because basically you're the IRS out of taxes that they should be able to collect as part of your salary. The other thing is, and this just changed in 2021, is called your basis. The basis is like what you put into your business. It's kind of an accumulation of your income and what you can pull out. Because if you pull too much out of your business and you don't have the basis for that, it can become a taxable event. And prior to 2021, this was just something you were supposed to keep track of as an individual for your business. That was your responsibility. However, in 2021, what the IRS did was add an actual form so that your basis would actually get reported to them and get tracked of. Because again, the IRS put out so much money. They're doing all the things they can to get money back. So of those issues, And make sure that you have that understanding before electing S-Corp. Make sure that it's your company. Make sure you're talking to somebody that has an understanding of it and isn't just wanting to give you the benefit of the tax advantage, because if it's not done correctly and you're not in compliance, that advantage can actually become a disadvantage. S-Corps are great, especially if your business is growing and moving. And I am formed as I elected to be taxed as an S-Corp a few years ago, but it's not the right move for every business at every stage. So make sure you're really getting an understanding of what that means and how to do that before you implement it. Okay, feel free to contact me. Thanks for enjoying Kids in the Background, and I will talk to you again. Bye.